In today's fast-paced world, the concept of investing is becoming more and more important for individuals who want to secure their financial future. Whether you're looking to grow wealth, save for a future goal, or simply make your money work for you, investing is one of the most effective ways to do it. However, for many beginners, the world of investing can seem overwhelming. There are so many different asset classes, strategies, and markets to choose from. With 2025 on the horizon, it's essential to understand the landscape of investments available to newcomers. The first step in embarking on an investment journey is to understand that investing isn't a one-size-fits-all approach. Your personal goals, risk tolerance, time horizon, and level of financial knowledge all influence the kinds of investments that are suitable for you. Let's explore some of the best investments for beginners. And to start, one of the most popular and recommended investments for beginners is stock market investing. While it may seem daunting at first, the stock market offers one of the most accessible ways to grow your wealth over time. Beginners can start by investing in index funds or exchange-traded funds, ETFs. These funds allow you to diversify your investments across a broad range of companies without needing to pick individual stocks. Instead of worrying about individual company performance, you're spreading your risk by owning a small piece of many companies. In 2025, we can expect continued growth in sectors like technology, renewable energy, and healthcare, and many of these companies are represented in broad market index funds. S&P 500 ETFs, for example, give you exposure to 500 of the largest companies in the U.S., including household names like Apple, Microsoft, and Google. This strategy is known as passive investing, and it's an excellent way for beginners to invest without needing to do extensive research on individual companies. Additionally, many platforms such as Robinhood or Vanguard make it easy to start with just a small amount of money. Another strong investment option for beginners is real estate. The real estate market can seem intimidating because of its large capital requirements, but thanks to the rise of real estate investment trusts, REITs, it's now easier than ever to get started. REITs allow individuals to invest in real estate without buying properties directly. These trusts pool money from multiple investors to invest in commercial or residential properties and distribute any rental income or profits as dividends to investors. The REITs offer a good balance of risk and reward, and in 2025, they're expected to continue performing well as the demand for both residential and commercial spaces remains high. One of the key benefits of investing in REITs is that they typically offer higher dividend yields compared to stocks or bonds. This makes them an attractive option for beginners looking for passive income. Furthermore, REITs can provide diversification in your portfolio since they allow you to invest in a completely different asset class. If the stock market is experiencing volatility, for example, REITs might be performing well, thus providing a hedge for your portfolio. Bonds are another investment to consider for beginners. While they are generally considered safer than stocks, they still offer a chance for steady growth and income. A bond is essentially a loan you make to a company or government entity in exchange for periodic interest payments. Bonds are usually less volatile than stocks, which makes them an ideal choice for those who are risk-averse or are just starting their investment journey. In 2025, government bonds are expected to remain a stable investment, and corporate bonds can offer higher returns, albeit with a bit more risk. For beginners, it's often recommended to start with government bonds or bond funds. These provide low-risk options and can be a good way to balance a portfolio that may be more weighted toward higher-risk investments like stocks. The benefit of bond funds is that they pool money from many investors to buy a wide range of bonds, making it easier for beginners to gain exposure to the bond market without having to buy individual bonds. An emerging investment option that's particularly appealing for 2025 is sustainable or socially responsible investing, SRI. Over the past decade, there's been a surge in interest surrounding ethical and sustainable investments, with more investors focusing on environmental, social, and governance (ESG) criteria. This shift in the investment landscape is driven by growing concerns over climate change, social issues, and corporate governance. For beginners who care about making a positive impact with their investments, ESG-focused funds offer a way to align their portfolios with their values. These funds specifically invest in companies that meet certain sustainability or social responsibility criteria. For example, you might find funds that invest in renewable energy companies, companies that have a strong commitment to diversity, or companies that have a history of good corporate governance practices. In 2025, ESG investing is expected to continue growing in popularity, and there are now many low-cost ESG ETFs available, making it easy for beginners to get started. One of the more unconventional yet increasingly popular investment options is cryptocurrency. Cryptocurrencies like Bitcoin, Ethereum, and other altcoins have seen massive gains in recent years, which has drawn the attention of many investors. However, cryptocurrencies are highly volatile and speculative, which makes them a riskier investment compared to more traditional assets like stocks or bonds. In 2025, cryptocurrencies are still expected to be volatile, but there may be more mainstream adoption and regulation, making it safer for beginner investors. For those interested in cryptocurrency, it's recommended to start with a small portion of your portfolio and consider using platforms that make it easy to buy, sell, and store these digital assets. It's also essential to approach cryptocurrency with caution and to educate yourself about the risks before diving in. Many beginners make the mistake of investing heavily in cryptocurrency because of its potential for high returns, but the volatility can lead to significant losses as well. Another relatively safe yet attractive investment for beginners is high-yield savings accounts or certificates of deposit, CDs. While these options don't offer the high returns that stocks or real estate may provide, they're a good starting point for those who are extremely risk-averse. High-yield savings accounts allow you to earn interest on your deposits, and the rate is usually higher than what you'd get with a traditional savings account. In 2025, the interest rate environment may continue to fluctuate, so it's important to shop around for the best rates. For those who want a fixed rate of return and are willing to lock their money away for a certain period, CDs might be a good option. They offer a guaranteed interest rate over a specified term, making them a safe way to grow your money over time. While these investments don't have the growth potential of stocks or real estate, they do offer stability and are easy to understand for beginners. Lastly, it's important to note that dollar cost averaging is a smart strategy for beginners to use no matter what type of investment they choose. This strategy involves investing a fixed amount of money regularly, regardless of market conditions. Over time, this approach helps to reduce the risk of investing a large sum of money at the wrong time. By investing consistently, you can avoid the emotional highs and lows that often come with trying to time the market. In conclusion, the best investments for beginners in 2025 will depend largely on individual preferences, risk tolerance, and financial goals. Stock market investing through index funds and ETFs remains one of the most accessible and reliable options. Real estate via REITs offers the opportunity to gain exposure to the property market without the need for substantial capital. Bonds, sustainable investing, and cryptocurrency all have their respective merits, depending on your goals and risk appetite. For beginners, it's essential to start with a diversified portfolio and to educate yourself continuously about the world of investing. While the journey may seem daunting at first, the rewards of investing wisely over time can be significant, and the key is to start early and stay disciplined. Start with low-risk, diversified investments. Beginners should consider starting with index funds and ETFs, which offer broad market exposure and reduce individual stock risk. These are ideal for long-term growth and require minimal expertise, making them perfect for those new to investing. Index funds and exchange-traded funds, ETFs, pool money from many investors to invest in a wide array of companies, often spanning different industries and sectors. Instead of trying to pick individual winners, which can be risky and unpredictable, these funds mirror the performance of a market index like the S&P 500 or the Nasdaq, giving you access to hundreds of stocks with a single investment. This diversification helps reduce the impact of any one company's poor performance on your overall investment, making it a safer choice for those just beginning their financial journey. Another benefit is that these types of investments are typically managed passively, meaning they have lower fees than actively managed funds. Over time, lower fees can significantly enhance returns. Additionally, many investment platforms now allow users to start investing in ETFs and index funds with small amounts of money, sometimes as little as a few dollars, which removes the barrier of needing large capital upfront. For someone just starting out in 2025, these tools offer a user-friendly, accessible way to begin growing wealth. These investments are especially suitable for long-term goals like retirement, education, savings, or simply building financial security over time. By investing consistently, using methods like dollar cost averaging, and holding these investments over several years, Beginners can take advantage of compound growth while minimizing risk. Overall, starting with low-cost diversified index funds and ETFs provides a strong foundation for a beginner investor looking to enter the market with confidence and caution. Exploring real estate and bonds for stability is a key strategy for beginners looking to diversify their portfolios and reduce overall risk. Real estate is often seen as a lucrative investment, but the large capital typically required to purchase properties directly can be a barrier for new investors. Fortunately, real estate investment trusts REITs offer a simpler and more accessible way to invest in real estate without the need for significant upfront capital. REITs pool money from multiple investors to purchase and manage income-producing properties, such as apartment complexes, office buildings, and shopping centers. As a shareholder in a REIT, you receive a portion of the rental income and any profits generated from the sale of properties, usually in the form of regular dividends. This can provide a steady stream of income, which is attractive to beginners seeking a stable investment. Furthermore, REITs offer diversification by allowing investors to spread their money across multiple real estate sectors and geographic areas, reducing risk compared to owning individual properties. Bonds, both government and corporate, are another excellent option for beginners looking for more stable and predictable returns. When you invest in a bond, you're essentially lending money to a government or corporation in exchange for periodic interest payments and the return of your principal at maturity. Government bonds, such as U.S. Treasury bonds, are typically considered very low risk since they're backed by the government. They're an ideal choice for risk-averse investors who prioritize stability over high returns. Corporate bonds, on the other hand, offer higher yields but come with slightly more risk since they depend on the issuing company's ability to repay its debt. For beginners, including a mix of government and corporate bonds in a portfolio can provide a stable foundation, balancing more volatile investments like stocks. This mix helps smooth out the ups and downs of the market and offers a predictable income stream, making bonds a strong addition to a diversified, long-term investment strategy. When it comes to high-risk assets like cryptocurrencies and emerging tech investments, it's important for beginners to exercise caution and understand the risks before diving in. While these assets have the potential to offer high returns, they also come with significant volatility, making them less suitable for those who are new to investing or seeking stable growth. Cryptocurrencies like Bitcoin and Ethereum, for instance, have experienced wild price swings over the years, with investors sometimes seeing substantial gains but also steep losses. The lack of regulation and the speculative nature of these assets further contribute to their unpredictability, which can lead to emotional decision-making and costly mistakes, especially for someone just starting out. Emerging technologies such as artificial intelligence, biotechnology, or clean energy can also be tempting due to their innovative potential and the promise of disrupting industries. While some early-stage tech companies have delivered impressive returns, many of them also face significant risks, such as uncertain market demand, regulatory hurdles, or the possibility of failure. For beginners, it's easy to get caught up in the hype and chase the next big thing, but without a deep understanding of these markets, investing in such assets can lead to poor outcomes. To mitigate these risks, beginners should limit their exposure to high-risk assets. A common approach is to allocate a small portion of their portfolio, often no more than 5–10% to these types of investments. It's also crucial to take a long-term perspective. Instead of trying to time the market or chase short-term profits, beginners should focus on strategies that prioritize steady incremental growth. One such strategy is dollar cost averaging, where you invest a fixed amount at regular intervals regardless of market conditions. This approach reduces the impact of short-term volatility and ensures you're building wealth over time without being overly exposed to high-risk speculative assets.